Welcome back to another video. Today we're going to be discussing technical analysis. So technical analysis is essentially the art of using charts in order to place trades. So we get to look at some backward looking indicators that are on our charts, and this helps us in our decision making process on where to get in on stocks. So let's get into it. So like I mentioned before, no one 100% knows. I don't care what you're watching or who you're watching on social media or TV. Nobody 100% knows where these prices are going to. Now, there are certain indicators out there that you can use that are better than others, that gives you more information to allow you to make these price predictions, but no one 100% knows. So when we look at the indicators I like to personally use, we have the RSI, which is a relative strength index, and we have moving averages, and I like to use the 50, the 100, and the 200, and I like to use what's called Bollinger Bands. So one of the primary tools I like to use are candles. When you're looking at the view of the price action on your chart, it can be represented in different ways, but I personally like to use candles, because candles essentially, they tell a story as they print. So the first thing to know is when you select a time frame, you will get candles that print within that certain time frame. If you're on a 10-minute chart, every 10 minutes a new candle is going to print. So let's go over some candle basics here. So when we look at this entire portion, this is a candle, and just like on a candle you have wicks. So when we look at that, and then this middle section is the body. So when we look at the wicks, they just tell us that especially with this being a green candle, that the candle opened here in this position, and over the course of however many minutes this candle was running for, it went to either this lowest point here and this high point here during the course of that time frame. With this candle being green, that lets us know that it closed around this area. So it closed higher than where it opened at. And all this shaded green area is called the body. So when we're placing trades or when we're trying to find places to buy in at, you can use different chart patterns. I'm not really big on chart patterns, and I can make a whole separate video on it, or you can just go do additional research. But the most common patterns I look at are double tops and double bottoms. And then I got them, if I typed out in red, this is usually a bearish chart pattern, or a pattern that indicates that the stock may go down. And if it's green, vice versa, it's a bullish chart pattern, and it usually signifies that the stock will go up. And a lot of these do hold true. I just use other indicators or the other methods to kind of plot out my trades. So I like the double top and the double bottom, and I like to look at the consolidation phase, or just when things kind of trade sideways before they make a break up or lower. One of my favorite things to use here are moving averages. And essentially a moving average is a line on the chart derived from closing prices from the selected time frame. So for example, if you select the 50-day moving average over the past 50 days, you get all the close prices, and then there's an average taken, and you'll see this line printed on the chart. Same thing for the 100 and the 200 day. So I mentioned exchange traded funds, or ETFs, and individual stocks here on this slide, because when you're looking at using moving averages, ETFs during a drawdown or pullback, however you want to say it, when they're decreasing in value, they have a good chance of either retracing back to the 50-day or the 100-day. Most likely because ETFs are a basket of stocks, right? So if one item in the ETF is not performing well, you may have other items in that ETF to help prop it up. So you don't usually see ETFs drop all the way down to the 200 day. Now with the individual stock, it's free game. Free falling down to the 200 day may be possible with an individual stock. And it happens more time than you think. But I like to use these points as points to buy, especially when I'm long biased or looking to get something that's on a discount. I like to use these as a metric to get in. Another metric I use is the Relative Strength Index, or the RSI. That is a momentum indicator that measures the speed and the magnitude of recent price changes. This is on a scale of 0 to 100. And then when we look at this, and I'll go over all these and actually show you what they look like on the chart. But when you see that it's greater than 70, that usually equates to being in overbought conditions. And when you see it around 30, we're usually in oversold conditions. And it's not exact. Like the RSI can hang out in certain levels for different time frames. So if you see it go to 70, that don't just mean like the next day we're going to start selling off. They just kind of gives you an idea like where are we on the spectrum. My favorite are Bollinger Bands. And so the Bollinger Bands is a comprised of 3 price average lines. There's a middle line. So this is the 20-day simple moving average. Then there's a top band. So this is going to be 2 standard deviations above that middle line. And then usually it signifies overbought conditions. And then the bottom band is going to be 2 standard deviations below the middle line. And this usually indicates oversold conditions. So this is, I'm giving away the way I chart right here. So first, you choose a stock. Next, you got to establish a time frame because you have to pick a time frame on which chart you're going to look at. I always start with the 5 year, just to kind of determine a trend, which is my next point. Then I look at the 1 year, 6 month, 3 month, so on and so on. And then we have to indicate a trend. So either up or down. So uptrend is termed as higher highs and higher lows. And a downtrend, when you look at it, it's going to be lower lows and lower highs. And then I like to look at support and resistance, like overall, but also just kind of look at where the peaks and those valleys are when you're looking at a chart. Because most of the time, the stock market, it don't just go up or go down in a straight line unless there's some significant news events. So, but on the normal time frame and like normal price action, you see these peaks and valleys. And that's essentially what I'm talking about, these supply and demand zones. But we'll talk more about that later. Then I like to throw on my 3 indicators: the Bollinger Bands, the RSI, and the moving average. And some additional considerations I like to make when I'm charting is I will occasionally look at chart patterns, but I definitely like looking at gap fills. So there's occasions where news events come out, earnings report come out, and you'll see, when you look at the chart, you'll see it move to a certain price, and then there's a huge gap, then another price starts, and it starts moving from that point. And a lot of times, all gaps are usually filled. And then we got seasonality. Like I just created a YouTube short on triple witching. So that's something that kind of plays into seasonality, or just like looking into something like when we get to the end of the year, the Santa Claus rally that typically happens, last week or two of December, first week of January, things of that nature. And then news events. Always got to consider what news may come out about the stock that you're looking at. Okay, spotting opportunities. So when I'm trying to make some big money plays, this is kind of my blueprint. I'm typically using high quality blue chip stocks. I'm big on, if it's working, use it. I'm not looking for the next Amazon when Amazon is still Amazon. I'm not looking for the next Netflix when Netflix is still winning and being Netflix. So I'm not going to use a penny stock. I'm not going to use this up and coming stock. I trade the same few stocks over and over again. Things that have proven track records, strong balance sheets, great cash flow. I'm going to use those to trade with and buy and put in my portfolio. I'm going to wait until things get to the lower end of the Bollinger Band to buy if I'm going long, or the top of the Bollinger Band if I'm going to go short. I'm going to wait till the RSI approach 30. I'm not going to expect, and it's not foolproof, but I'm not going to expect the stock to keep running up if the RSI is above 70. I'm going to wait till it's 30. And then I want to see that the stock is approaching those simple moving averages, the 50, the 100, the 200. I'm not going to buy when they're way above those levels. I'm going to wait till they start approaching those levels to buy. And my favorite has to be the percentage off the all-time high. So if a stock is, for example, $100, I'm going to go ahead and mark off what 50% is, what 20% is, what 10% is. And I'm going to use those as levels to buy in. So when we look at the index as a whole, like the S&P 500, just kind of knowing the definition of a correction versus a crash. So a correction is usually up to 10% drawdown, and a crash is usually up to 20% drawdown. So I kind of use it as a barometer too. So I'll look at the S&P 500, then I look at whatever stock I'm looking at and just kind of seeing where we are. Because oftentimes rising tides lift all boats. So that's why I kind of use the S&P 500 first, and then I go to whatever stock I'm looking at. So let's hit the charts. Okay, we're over here on Yahoo Finance. I typed in SMH, which is the semiconductor ETF. One of my favorite ETFs to trade. I've been trading this for a few years now, just in and out. And that's what I mean. Like, I have a starting five, really 5 to 8 things that I trade over and over again, because you just want to learn those personalities of those stocks or ETFs that you're using, and you feel more confident and you have more conviction in the trades that you're placing or the spots you're buying these stocks at. So when we look at it, I personally like the candle view. So I have candles, and I have no indicators up here. It's just price action over a 5-year period. Got my time frames at the bottom. And that's what I want to see. I want to see a bottom left to upper right. That's what you want to see. Bottom left, upper right. Okay. Then I'll go to the 1 year. So this over the past 1 year. Kind of like to go 6 month, 3 month. Well, let's go back to the 1 year. Okay. So let's start adding a couple things to this chart. So we'll go to indicators. Let's add the RSI. And this is what I'm talking about down here on the right. You see currently from the current close, we're sitting at 63. So we're still relatively high, but if you look at SMH as a whole, it really hadn't dropped, especially in the past year, to crazy levels. But you see, as we approach that 30 mark, if you buy in where it gets closer to 30, which is around this area, look at all that growth that you can capture. That's why I like to wait till at least approaches that 30 mark. Like, I'm not going to buy up here where it's in the 70s and the upper 60s. I'm going to wait a little bit. Or if I'm starting a position, I won't go all the way in. Like, I'll probably, I'll speak in terms of trading options. I may buy 1 or 2 contracts up here. Let's see if we come down any more. Buy another couple contracts around this level. Wait till we get down a little bit more. Buy another few contracts. And I'm buying leaps. So I'm buying expirations that go out to about, 1 to 2 years. Okay. Next, we'll throw the Bollinger Bands on. one thing I like about Bollinger Bands, you see like as it go out the band, it has a tendency to snap back into it. So we went out the top here, it goes back in. At the top there, went back in. At the bottom, goes back in. So I like doing that. I like placing my put options when we kind of come out the band at the top. I like placing my call options, especially when we're under that middle line, and especially if I see this. When we kind of come out the band at the bottom end, I'll place a call, riding the wave back up. And also the direction that the middle line points usually tells you the trend. So as this line goes down, you see the stock itself or the ETF dropped. And so you see how like this line is going up, that's signifying an uptrend. It's going down, downtrend. And let me show you the gap fill I was talking about. I'm just gonna take the Bollinger Band off for a second just so you guys can see. So this is what I was referring to when I said gap fills. So I'm pretty sure at this point right here, probably have some good news come out, maybe some NVIDIA earnings, something good happened to get us to go from this 220 all the way up to this 230 area, just like almost essentially overnight. Okay, and you see this little area here that my cursor is in. Now I'm expecting as time progresses that we're gonna eventually fill that gap, and we filled it here. So that's what I'm looking at when I say a gap fill. That's an opportunity. Those are always opportunities, and we have little gaps here. So who knows, maybe, you know, SMH is right here at 264. Maybe this 256, 257 level may be a target. Who knows, somewhere in this 259 to 257 may be a target for this stock, but we'll see. So I'll add the Bollinger Bands back. And then the moving average. So this is the 50-day moving average. And you see how you can use it as an opportunity to buy. So essentially, anytime it's up under the 50-day moving average, if you place a call, you increase the odds of it working out and eventually riding that wave back up. So I like to use a percentage off the all-time high. So when you look at SMH, the high has been 270 to about 279, 280, right around that area. Yep, 279, 280. So I'll just say 280. So I personally like to use a percentage off the all-time high. So when I look at this, 5% off 280 is going to give me 266. So we're already at 264. And so I actually, full disclosure, I started a call option position right here at this 266 level. Just one contract. We'll see what happens. If I go down a little bit, I'll add to it. If we continue to go up, I'll get my gains. And then I looked at 10%. Where's 10% off 280? That'll put us at 252. So that'll put us closer to filling this gap. We'll have filled that gap at that point in time. And then 20% will put us all the way back down at 224. I don't truly see us getting down 20%, but I do think, somewhere between the 5 and the 10% is realistic with a little bit of a pullback, and NVIDIA is a big contributor in SMH, and it's already down 10%. So SMH might not even go down that much more, but if it does, I'll be adding to my position. So in conclusion, these are some of the things I like to use when I'm charting and using technical analysis to make some of my decisions. You can make it as complex as you want, as simple as you want, but I believe in just keeping it simple. And the majority of time, to be successful in this game, you have to be disciplined. So if you create your little checklist of certain things you want, I want to buy long calls when it's at this point in the Bollinger Band, hit this moving average, RSI tells me this, and if it doesn't meet those criteria, don't place the trade. That's how I've been successful, just being disciplined and over, making sure things hit my checklist. Until the next time.